Hello, everyone. Welcome to a special MarketBeat live stream talking about the big Fed announcement today. To break down all of the moves that it might have in store for your portfolios is MarketBeat analyst Thomas Hughes. Thomas, thanks so much for joining us today. Let's just start with the big news. And what was the news out of the Fed today?
Well, the Fed had their meeting and they cut interest rates by a quarter percent, 25 basis points. That was as expected, and the market responded favorably to that news initially. Along with that cut, they indicated two more cuts this year and another cut for next year, which I think is a pretty solid outlook. Some headlines and some analysts are kind of concerned about the outlook for next year being a little tepid with only one rate cut forecasted. But I think the forecast for two more cuts this year is kind of hot. That offsets it. What I'm looking at is 100 basis points of cuts between today and sometime next year, which aligns with the outlook. That's pretty bullish. I think that it sets the S&P 500 up to continue its rally.
That's a good bullish outlook for sure. We've already got a question in the chat today, and that's, do you think that the market might see more reaction next week even? That was really my question leading into today is we got exactly what we expected, right? This is exactly what the market was expecting, and the market's not doing much of anything right now today, but could that change tomorrow or by Friday or like the viewers asking next week? Do we expect to see some kind of reaction come out of this?
Right. There could be a reaction next week. I would be more concerned about the next 2 days. This week is also triple witching options expiration. The S&P 500 is up 37.5% from its recent lows. Plenty of reasons for traders to want to take some profits. This news to me is pretty much as expected and aligns with the uptrend. Didn't provide any juice for the rally. So there certainly is a cause or a reason for some investors or traders to take profits. If that selling becomes kind of heavy, then we can see the index correct by a percentage point, two or three. But I would expect to see that dip used as a buying opportunity by even more traders and investors, and for the rebound to start pretty quickly.
I want to talk about some of the biggest points that came out of this announcement today. And that wasn't, today was as expected. The rate cut was as expected today. But I think the thing that's more interesting is the announcements for the future. Talk about what the Fed said to expect yet this year and next year when it comes to rate cuts.
Yeah, well, right. Well, Mr. Powell said that this isn't the start of a long downward cycle, and they issued a tepid outlook for next year. But as I said before, I think the outlook for this year is pretty strong. I mean, they're going to cut three times by December, 100 basis points by sometime next year, by early to mid next year. That's a pretty solid outlook. Um, so what we're going to have happen is either the economic data will continue to be tepid or worsen and cause them to cut more aggressively, or it won't, which means it'll start getting better, which case interest rates are in a good spot where they are right now, and the market can continue to rally anyway. Because in that scenario, economic data is positive, GDP growth is positive, corporate earnings will be positive. All good news for the S&P 500 and for stock prices.
Yeah, what do you think is behind the rate cut announcement that there's going to be more to expect? Was it a total of four more to expect over the next year? Why do you think they're coming out so early, kind of giving this expectation?
Well, I think there could be a couple of things at play here. One, they want the market has become kind of unsure, so it needs to be reassured. So that initial 25 basis point cut, this kind of reassuring for the market. That next 50 basis points, which is due by the end of this year, um, to me is kind of a preemptive move. If the Fed is seeing labor markets weakening, they're going to want to try to step in and kind of reassure the markets and support that labor market, get it to start to growing again. Um, and then as far as next year, I think they're just being cautious. The Fed is just doing what it usually does, which is, we wait for the data. We don't try to front run things. So they don't want to get the market's hopes too high for next year, and just wait and see, let the data come out and see what they need to do.
Yeah, I think the next point to move to is what to do next as an investor. That's a question that just came in, and that's a great question. The question is, do you adjust your strategy? Do you move into small caps? Where do you see this rate cut kind of changing how people should be investing, and which companies might see the biggest growth right now?
Well, right. So the first thing I would say is you need to stay the course with whatever you and your financial advisor have worked out. I don't think that this news is going to give anybody cause to make any big major changes. Um, the market leaders are still going to be market leaders. Those are all being supported by AI. What I do think will start happening is there may be some more visible movement into small caps. We've been waiting for that sector rotation to really gain some momentum for over a year now. But now that we have an outlook for some more aggressive rate cuts, that plays into an outlook for freer freer capital within the system, more investment into small caps, more growth for these companies. And so we would expect to see the Russell moving higher. It did move higher today. It wasn't the biggest mover, but it didn't sell off. Certainly showing some support. What I would be looking for over the next, few weeks, few months is just more signs of big money moving into those small caps and looking at those small cap leaders and watching them for potential buying opportunities.
Well, speaking of market leaders, let's talk about some of the moves that didn't happen and did happen today. I think I'll go with some of the negative moves first that stood out in the heat map, and that's Nvidia taking a little bit of a downturn today. What do you make of that?
Right. I think Nvidia pulling back just falls under the category of profit taking. That stock is up significantly since its recent lows. Again, the news today doesn't change the outlook, affirms the outlook, which is for really strong, robust growth. The outlook for this stock is still for it to rise by triple digits over the next decade. Um, the earnings outlook, the revenue outlook is really robust. The cash flow outlook, the balance sheet, all of that is really playing in Nvidia's favor. So this pullback would definitely be considered or should be considered a buying opportunity.
Yeah, there's another pullback to talk about, and that's Broadcom. Somebody mentioned this in the comments a little bit
Right.
today. That's pulling back, but it had such a run up last week that I feel like this is expected. Does this even have anything to do with the rate cut announcement today?
I mean, it's the same story. I think what you're seeing across the market is just a lot of stocks, a lot of markets that have had significant rises over the past few months. This news gives a reason, an opportunity to take some profits. We're seeing some small pullbacks, nothing that I consider to be really major right now. As far as Broadcom goes, it's pulled back, but it's still above critical target level, showing support above, was it 1, 2, 3 weeks ago's closing price. Uptrend is still intact. What we might expect now is for this stock to consolidate, moving to the side for the next couple of weeks, and then potentially moving higher from there once we get some other follow-on good news, which could be in the form of trade talks or economic data, something that assures the market that the sky is not falling, we're still growing, corporate profits are still flowing, capital returns are still coming. Um, so when that happens, the whole market should probably move higher as well.
A very interesting look at this. I do want to talk a little bit about the move from small caps to large caps like this and how we expect these rate cut changes to impact them. We just talked about the biggest leaders. Nvidia, Broadcom's a huge company too. But what about some of those smaller cap tech companies? That's where we've seen a lot of the growth this summer. Do we expect this new announcement today to be even better news for some of those smaller tech names?
Well, yeah, because it's going to make it easier for them to get their capital, make it cheaper for them to operate, also make it cheaper and easier for their potential clients to come to their business. So it really just is the kind of news that creates a tailwind throughout the system. And at the time, it's a small move, but it's throughout the system, so it can compound over time as these businesses start realizing they're saving money and then redeploy that cash into new investments. And so we just expect to see this kind of snowball effect start to happen, especially with additional rate cuts expected over the next few months.
I want to move gears a little bit from just talking about rate cuts to talking about some really good stock opportunities for investors. If you do want to look at some of these smaller companies that Thomas is just talking about, he just had an article come out just a couple of days ago on MarketBeat.com that's been really popular. It's on 3 hot tech stocks with bullish charts. And these are some great names, Thomas. I want to make sure we cover them today and talk about some of the opportunities here. We're already starting to see, again, you wrote this article, I think exactly 2 days ago, and we're
Yes.
already starting to see some of these names really jump. Let's get to one of your favorite ones. That's AMPX.
Yeah.
This stock's had a really good couple of days.
Yeah. Amprius has moved up almost 14% today. Let's see here. It looks like today, yeah, we're looking at almost 30% for the week. To me, and now granted, I'm about to say something really bullish and the market will probably turn around tomorrow and make me look like an idiot. But right now, what I see is a really textbook bull market case where a fundamental story is gaining momentum with revenue and profits growing and a really robust outlook that's brightening. And this is being seen in the charts. What we see in the charts is this stock that IPO'd, hit a really big high, corrected over the following 2 years because the reality hadn't matched up with the outlook. But since about the middle of last year, with capacity ramping and orders building and revenue beginning and cash beginning to flow, the market has picked up. We see a baby rally forming. We've got volume on the rise. Over the last few weeks, what we've seen is the market consolidating and forming a bull flag pattern. And just today and the last 2 weeks, the market has confirmed that rally, moved to a new high, confirmed the flag pattern as a continuation. And so now it's on track for the $12 to $14 range. I think it'll probably hit that before the next earnings report. The next earnings report will probably reflect what I've been saying, which is ramping capacity, ramping production, ramping orders, ramping revenue, and ramping profitability, all equaling hyper growth and improving outlook for hyper growth. It'll probably get the analysts to start raising their targets again and keep the stock price moving higher, potentially retesting these all-time highs, these IPO highs, possibly this year, but probably sometime early next year.
Now, let's talk a little bit about why you like this company so much, too. The potential in this sector, we're seeing it in the charts, we're seeing the momentum, but why are we seeing growth? Like, what is it about this company that makes you so into this stock?
Well, their product is actually good. I mean, it's not a dream, it's not an idea. They're not trying to make it happen. They've established the technology works. They're making the technology. It's being used by their clients. Their clients are following on their initial orders with newer, larger orders, affirming the product's work. It's becoming well established as the power source of choice amongst drones and unmanned air systems. These batteries have applications across the energy spectrum. So, as soon as they're able to make enough batteries or figure out some way to license their technology to other manufacturers, we're going to start seeing Amprius style batteries everywhere. So, this is potentially a disrupting technology for the battery industry, where the next thing we know, we'll no longer be using traditional lithium ion batteries, but only these new silicone anode batteries made by Amprius or one of its competitors. But talking about competitors, Amprius is certainly the best positioned, has the best order pipeline, and the chart looks the best.
Very good chart to start with. So we've talked about Amprius on this channel before. The next name that you have for us, again, in these smaller cap tech companies that have a lot of upside ahead, this is that growth area that a lot of analysts are saying right now with the rate cuts, with this rate cut environment today and moving forward, these smaller tech names have the room they need to grow even more. So let's get to that second name that you have for our viewers today.
Yeah, that second name is Airship AI, AISP. It's not quite as strong of a story as with Amprius, but it's very similar. We have a technology that is providing utility for businesses, organizations, and governments. They've got an improving deal pipeline. They've got revenue and profits, an outlook for hyper growth, and these things are being shown in the charts. This chart hasn't begun to move to new highs the way AMPX has, but we see rising support at a critical level that aligns with key moving averages. The moving averages right now are forming a golden crossover. So, assuming we get some more good news, which I think we just got some good news today with the follow-on order from one of their companies for one of their clients, and more good news over the next few weeks. And then the upcoming earnings report, I would expect to see the analysts continue lifting their price targets and to drive this stock above its critical resistance point, which is right near 660. And at that point, the really robust targets come into play, because then it would be on track to retest its all-time highs, which are in the $12 to $14 range.
Yeah, I've got the analyst price targets pulled up here, and it doesn't look like a lot of analyst coverage, so it's kind of hard to even go from that too much. It looks like there's one as a high as $12, which is quite a high range. Oh no, the
Right.
high is $6. Sorry, I was looking at something down there that was wrong. But anyways,
Yeah, there
pretty
there
close
aren't
to its consensus price target right now.
there aren't a lot of analysts covering it, but with the story that's unfolding with the revenue and the earnings outlook, I expect to see more analysts begin covering it. But on the flip side, it's got quite a it's got improving institutional interest as well. Institutions are buying this stock, also providing some support. So it's just a matter of time for this company to give a catalyst, which I think will come in one of the upcoming earnings report, probably in this next one.
All right, very interesting. Let's get to that third company on your list. It's a name we've definitely talked about on MarketBeat before. Lots of investors have been interested in this one. What is SoundHound doing?
Yeah, SoundHound moved up today, gained about 3%, showing support at a critical level. Another small cap tech stock that's on track for hyper growth. It's already producing hyper growth now. Um, the story this year is that it's outperforming expectations and raising guidance, expanding into new verticals, getting new clients, deepening penetration of existing clients, has multiple tailwinds for its growth. What I'm seeing in the stock price action is a market moving up, kind of tackling some resistance points that were formed earlier this year when the stock price corrected. But right now, the indications are all bullish. The critical point today is in the $15 range. If we get above that, the similar situation, we will have crossed an inflection point and open up another significant potential for upside. In this case, we're looking at $16, $22. So that's probably 35, 45% once we get above this critical level. But again, looking towards the upcoming earnings report as a potential catalyst, uh, not only because of the past results and the guidance, but because the details within the report suggest that not only the guidance, but analyst forecasts are all going to be too low. We're expecting to see outperformance and another improvement to guidance as spending on AI powered services gains momentum.
Very good. Well, we've got our first premium question from a viewer today. Our Matt Paulson wants to know what the banks are doing after the Fed rate cut today. I think that's a good segue from talking about some of these small cap tech companies, moving into how are banks reacting after the Fed rate cut right now.
Right. So the XLF looked like it held pretty steady. JP Morgan moved up by almost a full percentage point. So on the one hand, lower interest rates are going to cut into their net investment income. That's going to be a headwind for earnings. Uh, but net investment income has been pretty robust over the past few years. On the other hand, rate reductions are going to help boost economic activity. I think that what we're seeing here is the market betting on economic activity outweighing the reduction in net investment income. And it looks like the uptrend in JP Morgan stock is intact.
Yeah, I think with all of the bank companies, not just JP Morgan, I want to pull up a couple charts for some of the other big banks here too. But I think the interesting thing to talk about is how much of an impact it could have on just the whole finance sector. Do we see an impact in housing? Do we really see more spending, like that boost in the economy that a lot of people might be expecting?
As I said before, these interest rate cuts are really a boost for the entire system, like throughout the system. Everybody's affected by interest rates. Everywhere you go where an interest rate is impacted by the Fed's base rate, there's going to be a little bit of softness. You're going to see a little bit of lower payments, and that's just going to free up capital throughout the system. Now, on an individual basis, you're not going to see enough free capital in the next couple of weeks or months to really move the needle, but it will be enough over time to start helping people build up savings and to help companies start reinvesting some more capital. And as interest rates continue to fall, the amount of free capital within the system will improve. Eventually, we'll reach this tipping point, what the Fed wants to happen, where we reinvigorate economic activity and we start growing again.
Yeah, I want to pull up the heat map really quick, Thomas, just to look at that whole finance sector a little bit. We are seeing quite a bit of green in the finance area. Like you said, JP Morgan is kind of the
Well, right.
standout one, but it looks
So I'm
like
looking.
everyone's doing
Well,
pretty well, but nothing saw too huge of a jump.
Bank of America is up almost 1.5%. Wells Fargo's 1.75%. It looks like the major banks are up. The small banks, Fifth Third Bank Corp rose by 2%. Um, so it looks like it's pretty good news for the financial sector based on these moves.
Very good. Well, we just got a few minutes left today. We want to stick to our live template a little bit here and make sure we get to some of the stocks that you guys want to hear about. So it's not a Market Beat Monday, but we will get to a few of your stock suggestions that you want to look at to see if they're doing any kind of moves today after this announcement. One of the questions that people wanted to hear about, I've got one that has 3 different names in it. We'll just start. Ravi wants to hear about Zeta, Zeta. And then VNet. This is actually one that came up recently in a discussion I had on a video that's going to post later this week. So we'll do VNet and ZETA. We can get to both of those really quick.
All right. So, I've got a line drawn on Zeta, so I've seen this chart before. It looks like we're rebounding off a bottom right now. 1, 2, 3, 4, 5. About 2 months ago, we crossed above a critical resistance point. It looks like recovery is underway. Let's see here, ZETA. Let me catch up with
their 3-month performance looks impressive.
Right. Zeta. What are they? Package software. Yeah, we just saw this not too long ago. Omni-channel data-driven consumer intelligence. Right. Okay. Right. So it's using AI to help provide consumer intelligence and drive sales. That sounds good. We know that data-driven moves are certainly paying off for lots of internet companies. 35% growth, outperformance. Yeah, this one looks good to me. You're going to want to dig into it a little bit more, but it seems like it's got decent business growth outlook. Analysts like it. We got 16 analysts, moderate buy, $30 consensus price targets, 45% upside. Price target hasn't really done much movement in the last year, but it's been real steady, which is a pretty good sign in and of itself. Most recent activity, couple of boosted price targets and an upgrade. So yeah, this is an interesting stock. I certainly would keep it on the watch list if nothing else.
All right, I'm going to just pull up right away this next one full screen here. This is VNet Group, an internet data center provider. And this looks like a Chinese stock before. I don't know if we've covered this one before or not.
Right. I don't think so either. But this chart also looks good. You said data center provider, so certainly has some tailwinds driving it. Stock price action in this year shows the market hit a bottom last year, started rebounding late last year, moved above critical resistance early this year. Nice volume spike, good sustained increase in volume shows the market's back engaged with this stock. Support at critical moving averages. Critical moving averages show a rebound and a golden crossover. Good market shift. Looks like this stock has entered an uptrend. I just want to keep an eye on it, keep track of the news cycle, make sure that the earnings outlook is still positive and the analyst sentiment trends are still positive. As far as that goes, let's see here. VNet. VNet Group.
Again, this is a cold look at some of these stocks. And
Right.
thanks for doing this, Thomas. I know this is our
You're
normally our Market Beat
fine.
Monday thing. Really
All
quick
right.
note while he's looking at this, guys, whether it's in this live stream or maybe some other live streams that we do on our Monday Market Beat Mondays, if you're ever wanting to make sure that your stock ticker gets covered in the show, super chat is a great way to do that. We've not really done much of that before, but if you have experience doing chats and live stream and you want to throw in a quick paid super chat, it highlights it and it makes sure that I'm actually going to cover it live with one of our analysts. So that's one way to do this if you want to make sure that your stock gets covered. All right, Thomas, let's get to what you've found so far on this company again.
Well, right. So the analyst coverage of VNet's pretty positive. You have 7 analysts rating a unanimous buy. The 996 price target assumes fair value today, but the trend is very positive. The consensus is up 200% in the last year, with the high end leading to another 15-25% upside. So we'll be looking for this stock again to be producing some good news to help support this uptrend. But right now, it looks like the market forces are bullish and driving it higher.
All right, very good. We've got time for just 2 more. We've got a hard out today in 5 minutes. So we're going to cover just a couple other things. One thing I wanted to talk about, Thomas, somebody brought up a good point about the housing market. Seeing, I think it sounds like the housing stocks maybe got a little bit of a hit today and is now a time to get in on either of these stocks. So I'll pull up D.R. Horton and see if there's some others to pull up here too. Yeah, it looks like D.R. Horton is down almost 5% in the last 5 days. But it's been on a good uptrend recently. And so I think the question is a good one from the viewers. Thanks again for putting that in the chat. Just looking at whether now is the time to get in if we expect this momentum to continue. I also think it's a little curious that this sector would see a downtrend today when the rate cut is announced.
Yeah, I think that I'm trying to get in the stock pool. There you go. Yeah, right. So I think today is just some profit taking. The stock is up pretty significantly over the last couple of months since that April bottom. Again, like we said before, the rate cuts didn't juice the outlook, but it does affirm the outlook, which is for some easing in the housing data and the housing markets. Today's housing data was pretty poor, so that might play into to today's sell-off. But I would expect to see the housing market not necessarily become unstuck, but certainly to begin picking up, if not real soon, then early next year, as the subsequent earnings, the subsequent rate cuts become priced into the market, and the impact is seen in mortgage rates. But other than that, the home builders in general make pretty good cash flow. They've been buying back shares and paying dividends. Balance sheets are healthy. So without some negative development, recession, whatever, these pullbacks would definitely be buying opportunities.
Very good. Well, Thomas, 2 more stocks, and they're big tech stocks again, but not the biggest ones. Want to talk about Micron and AMD. I know you are a big fan of AMD. We had a really good video last week on this. I've got Micron's chart pulled up right now, so I'm just going to get that one pulled up. It looks it's not doing, it had a recent big jump up, but the last 5 days hasn't done much. But in the last month, it's up over 30%.
Right. The chart that I'm looking at, the weekly chart, looks real strong. This stock has been rocketing higher since the last earnings report, which just really affirmed its place in the AI ecosystem. You think all of these chips are using all of these all this memory, and a lot of that memory is coming from Micron. Certainly seen in its results. It's got business with all the major chip manufacturers, and its other businesses are also doing well. Plenty of tailwinds for this company. Last week, the market came up and tested all-time high. It's an all-time high. This week, we broke to a new high. I think it's all-time high. Broke to a new high. But either way, it's very bullish. The indicators are very bullish. And I think that Micron will continue to move higher simply because of its position and the outlook for AI spending. We're not going to be slowing down on data center construction anytime soon. I mean, just look at Oracle. Oracle says that it's going to more than double its data centers over the next 2 to 3 years. And I think everybody that has data centers is kind of on the same wavelength of just increasing their capacity, which is just totally good news for Micron.
Very good news. The last chart, and we've got just about a minute to cover it real quick. We're going to talk about AMD. This
Mhm.
stock, the big question here is if the news with China and Nvidia might be impacting AMD's chart at all. It's had, not the strongest chart since August. Wondering when we might see a turnaround in this one.
Right. So the story with AMD is when it starts to sell its MI400 line next year, that's going to unlock an entire new market. It will no longer be a niche player that some, AI people are using. It'll now have products that provide utility for all the hyperscalers. It'll provide some advantages over NVIDIA GPUs. So I'm expecting to see its revenue to begin, skyrocketing immediately after those sales begin. Um, so right now, the market for AMD is, kind of anticipating and pricing that event in. And here in August and early September, the market has pulled back to what I see as a critical support level. Certainly looks like a good buy to me right now. I would expect the subsequent earnings reports to be very good and to help catalyze this market and to move it higher and for it to set new all-time highs. Probably not this year, but sometime early next year.
Well, Thomas, thank you so much for talking about some of the specific stocks that could benefit from this rate cut today and in this current environment. A lot of really good stocks to cover today. Thank you for your time. I know I kept you about a minute longer than you had today, so appreciate your time.
We're all good.
Wanted Yes, thank you, everybody who tuned in today. Again, it was kind of an unusual time for us to do a live stream, so thanks for joining us on a Wednesday night. We hope you'll join us again for Market Beat Monday, our regular time at 4:30 on Mondays. Thanks again for watching, everyone. As always, happy investing.